Wondering which cryptos you should buy and when? While researching crypto assets, you may come across a special type of price chart called a candlestick chart. That's why it's worth taking some time to learn how these things work. Similar to the more familiar line and bar charts, candlestick charts show time on the horizontal axis and price data on the vertical axis. But unlike simpler charts, candlestick charts contain more information. At a glance, you can see the highest and lowest price reached by an asset in a given time period, as well as the opening and closing prices. What is a candlestick chart? Here is an example of a real Bitcoin to US dollar candlestick chart from. Candlestick charts give you a snapshot of whether a market price movement is positive or negative and the magnitude of the movement. The time frame shown on a candlestick chart can vary greatly. For example, Coinbase Pro defaults to a 6-hour window, with each candle representing a 5-minute window, but users can adjust that time frame to be longer or shorter. Note that unlike stock markets, cryptocurrency markets are open 24 hours a day. In other words, opening and closing prices are the prices at the beginning and end of the selected time period. Green candles indicate that prices are rising, meaning the open is below the body and the close is above it. Red candles indicate that prices are falling, meaning the open is above the body and the close is below. Each candle consists of a body and wicks. The body of the candle tells you where the opening and closing prices are at during the candle's time frame. The lines extending from the top and bottom of the body are wicks. These represent the highest and lowest prices reached by the asset during the time the exchange took place. What do candlestick charts tell us? Candlestick charts can reveal much more than price movement over time. Experienced traders try to find patterns to gauge market sentiment and make predictions about where the market will head. Here's some of what they're looking for. For example, a long wick at the bottom of the candle could mean that investors are buying an asset as prices are falling. This could be a good indication that the asset is on an upward path. A long wick on the candle may indicate that investors are trying to make a profit. This indicates that there will be a huge potential sale in the near future. If the body covers almost the entire candle and there are very short wicks on either side, or the wicks are not visible, this may indicate a strong bull sentiment in a green candle, or a strong bear sentiment in a red candle. Understanding what candlestick charts can mean in the context of a particular asset or under certain market conditions is an element of trading strategy called technical analysis. Traders attempt to use past prices to identify trends and potential future opportunities through technical analysis. One candle signs, to be read. Traders trading on extremely short time frames sometimes focus on just one candle. Recognizing these one candle signs can be useful practice for a beginning investor. In the image below you can find 4 common single candle holder signs. A long upper shadow can be an indicator of a bearish trend. In other words, investors may want to sell the asset and make a profit. The longer the upper shadow, the stronger the indicator. A long lower shadow can be a sign of a bullish trend. It shows that investors want to buy the asset, thus pushing the price up. The longer the lower shadow, the more reliable the signal. A doji candle has no body because the opening and closing prices are the same. These are generally interpreted as market instability and are a possible indicator that a price reversal may occur. Why? Doji candlestick charts were first used by Japanese rice traders in the 18th century. Doji means there was an error, probably because it wasn't common for prices to open and close in exactly the same place. Umbrellas have distinctively long lower wicks. The red umbrella is also known as the hammer. When you see a hammer, it often means that the asset is experiencing significant overbought action and the price may soon move up. Green umbrellas, on the other hand, have an infamous nickname, hanged men. It is often a sign that sellers are ready to sell the asset and convert it into cash, and the upward cycle will reverse. It's important to remember that single candle signals can be an important clue, but accurate reading of the market requires understanding the broader context. It is not easy to spot trends and patterns in candlestick charts. If you are not sure which investment strategy is right for you, consult a professional advisor.